Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. In questo momento indice nel territorio negativo dopo la lunghissima corsa che l'ha portati di nuovo su livelli record, ma ne parliamo con il mio ospite qui sul floor, come vedete è Kenneth Polcari, che è direttore delle operazioni sul floor per O'Neil Securities. Kenny, buongiorno.
How are you?
I am very well. How are you?
I'm great, thanks.
So Kenny, the market today is down, but even though we are seeing, very, very close to the level of the closing of last week.
Right.
Now, this morning I read Goldman Sachs being very optimistic again about the market for the next 3 months. They raised to overweight and they said, yeah, the earnings will be better, dividends will be higher, there is no reason not to buy. What's going on?
Confusion, certainly, because it was only 2 months. It was only 2 months ago when Goldman came out and said, "Watch out, be careful, market's going to." And now
Correction is coming.
Correction is coming, and in fact, we got a 4% correction, and we did. But 4% isn't even really considered a correction, and all of a sudden they become real bullish again. Well, the fact is we got a couple of things, right? We're coming to the end of the third quarter. We got earnings that are going to start in a couple of weeks. We've got, kind of that sense as analysts and strategists now start to tweak their numbers for year end, and they look around and they see what's happening not only around the world, but how asset managers are performing, how much cash is on the sideline. Are some fund managers underperforming, and if they are, does that mean that they're going to have to play catch up? And playing catch up means they have to start to invest some money, which net would be good for the market, right? So my sense is we got a lot of that discussion going on, but that's typical of this time of the year. It happens all the time as we approach the end of the third quarter when analysts and strategists start to reassess kind of the overall performance of the market and then what it's going to look like as we're moving in. Now, certainly things are getting better. Third quarter earnings are expected to be better, although we're also going to start to see some analysts tweak their numbers now over the next couple of weeks. We'll see stocks react on estimates to get revised lower, and most of them are always revised lower versus up. So these stocks will react now, then they'll churn, and then when the earning is actually announced and they beat that new lower estimate, then you see the buyers come back and the stocks start to rally, right? That going into kind of a better sense that the U.S. economy is making slow progress, really kind of sets itself up well for continued strength in the market. Do I think we're going up 30% like last year? Absolutely not. Right now, we're up about 8.5%. If you throw dividends in, we're up about 10.5%, which brings us right back to kind of a normal return when you average it over the last 30 years. And so my sense is, we're probably going to churn and end up very close to where we are, 2025, something like that.
But we've been talking about the fundamentals here, the earnings and the economy, but also we can also say that the ECB delivered. The data that we are seeing from the U.S. economy are not as strong to justify higher interest rate from the Federal Reserve. So basically, yes, fundamentals, but also central banks that are still helping.
And so central banks continue to really be the overall story, right? And yes, the ECB, did pull out the big bazooka, although it's not the biggest bazooka he's got, because he still said if, in fact, this latest program doesn't really help, he's still got more up his sleeve that he could launch if he needed to. I think what happens now is that investors, global investors, will wait. They've got to give this some time to filter down. They've got to see how it really affects the European economy. So I think people are willing to give him credit, and they're willing to give them the benefit of the doubt before they start to get concerned. I think, and the sense is that this latest program should stabilize Europe and at least get it to a point where now it's going to start to once again move ahead. And so I think investors are going to be patient.
So now we are also going to look, especially this week and next week, to two companies in particular. This week is Apple week, of course, tomorrow. We've been waiting for the announcement. And next week is Alibaba, probably, in the next couple of weeks at least, it will be Alibaba time. How important are these two events for the market, especially to attract investors back and gain some volumes and get some confidence in the market?
Well, I certainly think the Apple event tomorrow, where they're going to introduce their iPhone 6, their new iWatch, there's going to be some other announcements that are, that are going to be bandied about. At least that's what the news is leading you to believe. Now, that's going to do two things. Certainly for technology, it's going to ignite more interest in the technology sector. It could cause, certainly money to move into the technology sector, and then have the NASDAQ challenge the most recent highs, which would actually be positive, right? To be that feel-good sense. The one that I think you have to really be quite interested in is Alibaba, right? It's going to be a big deal. They're looking to raise a lot of money. And so certainly there are a lot of investors that are waiting on the sideline to get involved and to jump in. Listen, they just announced this roadshow, which is starting this week. They've announced their pricing, $60, $66, and they're ready to launch on the 18th, which means they're going to price on the night of the 17th, and then trading will begin here at the New York Stock Exchange on Thursday the 18th. So there's going to be a lot of anticipation and excitement over this issue for a number of reasons. It's going to give the average investor an opportunity to get exposure to China, which is not so easy to do for the average investor, and this will almost become like a proxy for the Chinese economy, and so people are looking at it like that. Traders are looking at it as a huge opportunity because it's going to be very liquid and it's going to be a tradable stock, and so traders are excited about the coming attractions, and certainly long-term investors are excited about what it's going to mean for them and their performance, and for the Chinese economy, and then for the bigger picture as Alibaba then really starts to expand across the globe. So it's going to be a very exciting story, and it's going to be one that's going to certainly create a lot of excitement, and it's going to draw a lot of money.
Yeah. And as you were saying, is here at the New York Stock Exchange, so also a lot of interest back on a big IPO, and it's been a great year so far for the IPO, and the pipeline keeps growing and growing. So the year might end really with a big boom of IPOs.
Well, and we've seen that, like you said, we've seen not only great IPOs this year, but a lot of interest in the IPOs because they are a new asset, not a new asset class, but they're new opportunities, right?
Within a reason to come back on the market.
New opportunities in the equity space, and certainly when you get names like Alibaba, which will certainly create global interest, but it also does make people. It helps investors feel better, right? Because it attracts that money. People want to be involved. They want to be in the equity space, and so therefore issues like that are great, especially when they come here to the New York Stock Exchange.
Absolutely. So now this week, what are you expecting? There is not much today going on, and not apart from tomorrow, probably that we will get, with the Apple news. So what do you expect for the S&P 500?
Well, there's a couple of things that are kind of in the background, right? On Wednesday, Thursday, and Friday, or Tuesday, Wednesday, Thursday, there's actually a European finance type of conference event summit that takes place in Milan, right? Now it's a think tank group out of Europe that comes together and tries to come up with policy and all that stuff. So no one's necessarily expecting anything so earth-shattering, but Mario Draghi will be there. He'll give a speech. Investors will listen to him. Is he going to say anything new? Is he going to indicate some other event that people don't already know? So people pay attention to that. Friday's retail sales. So it's going to give a quick peek at how the consumer is setting up, how the consumer feels, and how that really sets up now going into, I hate to say it, fourth quarter and the Christmas and the holiday shopping season, which it's only going to be a couple of weeks before we start having that countdown to the holidays.
We already had some shops like Christmas in July.
and it's so frustrating. I can't stand it. But one way or the other, that's going to start to happen. And then we're going to have the earnings, which are going to start in a couple of weeks. But that being said, I think it's going to be a relatively quiet week with the exception of tomorrow's Apple news. And that's going to really affect Apple and some of the tech names. That may not necessarily affect the broader market as much as it's going to affect the technology space and the NASDAQ, right? But really, I think that people are going to start paying much more attention now to the tweaks in the earnings estimates as they get refined, and kind of continuing news that comes out of Europe, because people want to see the reaction after the ECB announcement.
Okay, we'll see. Kenny, have a great week.
And thank you, and you too.
E grazie a voi per l'attenzione. Alla prossima.